be talking about the 101 Reasons to Own the World's Greatest Investment. And this is a book that was done by Robert Miles. I actually am friends with Robert. I've been through his classes. He has been studying and following Warren Buffett and Berkshire Hathaway for decades. This is a best-selling book. This is the book. I buy a bunch of these on Amazon because it's an older book, but it's totally appropriate for today. And I bought this one off eBay for a couple bucks. And lo and behold, there is the autograph by Warren Buffett. So somebody bought this book. Somehow they got an autograph, which is very difficult to do. And maybe somebody passed away or something like that. And they were cleaning out the books and they sent it to a thrift store. And I ended up buying it off of eBay. And I got a $2,000 signature right there just on Warren Buffett. So what I want to talk about today, though, is there's a couple of things. Number one is that in our classes, when you go to the course menu, you can find and see those courses. So Ethan, I'm going to let you take them there for 1 second. Let's go to our course page. And then when you log in and go to all the courses, you scroll down to the bottom, we do have some classes on Warren Buffett and Robert Miles. And so you can go through those classes that we've created. And Robert was a guest of ours, and he spent quality time with us on that one. So when you go to your courses, simply log in and you can go down to the very bottom. Let's go to the courses, scroll her down to the bottom there. Right there. Perfect. Okay, so we have all kinds of stuff on Buffett right here. And we have the interview that I did with Robert Miles, and that's on here, how to make more money with investments. As you go back up to the top and you look at the success stories and how to, I'm going to show you some pieces there. Keep going all the way to the top, Ethan. And then let's just pull it down just a little bit. And you'll notice that on our success and motivation, we have some different topics in here. Keep going. Actually go up. There you go. Stop right there. So we have a whole section on Buffett right here on our success and motivation. So those are some wonderful classes that you can do there as well. Okay, Ethan, if you give me the screen back, I will go ahead and take them through my section right here. So this is 101 reasons. And again, there's more information than you want to know here. I mean, I'm just going to go through it kind of quickly. And then really on Saturday, when we get together for the big Buffett conference, I will really spend a lot more time talking about it. But I really wanted to do is I wanted to kind of give you a quick overview of some of the reasons of why I am so, why I like it so much and why we do it. One is the historic performance. As you look at Berkshire Hathaway, and you can open up their report, it has how it's done against the S&P 500 for the last 30, 40 years. It goes year by year. This is what the S&P did, and this is what Berkshire did, and it's outperformed by quite a bit. And so one is that it's got a long track record. Number two is because it's a stock, you're not investing in the company itself. You don't have the ups and downs of the losses. You know, you're buying a share of stock, and that stock owns all these other major companies and investments. And so it goes up and down in value. And all we're doing is just simply buying the shares, and, you know, we're not taking business losses on it. The cost is very little or nothing when you buy it. It's a stock. And so you don't have any money under management fees. So that makes it huge. That's why it's the preferred way to get started. The public record, you can see what he's done for the last, 50, 60 years. There's an owner's manual. One of the things that is so cool about Warren is that when he dies, on his tombstone, he wants it to read that he was a teacher. He wants to be known as a teacher more than he wants to be known as the world's greatest investor. The stockholder meeting that we're going to watch on Saturday is very unique. You know, most of the other companies that have a stockholder meeting, they don't want to talk to their stockholders. They don't want anything to do with them. It's pretty much held in a very with a very small amount of people. He's 180 degrees opposite that. It's a big old party, and it's really fun to do that. Number 7, there's no dividend. The reason is that when there's no dividend, what this means is that as the company makes a profit, as the stock makes a profit, then they usually pay that out to the individual. So you can actually get a stream of income from stock. The problem is that the company doesn't get a tax break and you have to pay taxes on it. So he said, hey, we like companies that give us these things, but we don't like to pay out dividends. We would rather have the money so we can reinvest it. There's no taxes on it. Okay, so because you're holding it, and when you do sell it, you get favorable tax gains because you're usually going to hold it for more than a year. Okay, so that is one of the pieces there too. In addition to that, this talks about his age, because it goes back into his book. He is older, but the greatest part about what he's done is that he's figured out how to build a company. Walt Disney did not build Disneyland. Walt Disney and Roy Disney built a company that built Disneyland. Steve Jobs did not build the iPhone. Steve Jobs built a company that built the iPhone. Warren Buffett has created a company and built a company that's going to run while he's not around. Okay. It acts like a mutual fund in that it has a lot of different companies, but instead of just the 500 biggest, they've been able to find the great ones that they could buy because they've been watching these for so long, and they're able to buy these great companies at a wonderful price, at a fair price, as he would call it. It has a unique charity program. So as you own stock, you get to vote where they donate some of the money. When Buffett passes away, all of his stock, in fact, he's been giving his stock away for decades. And there's 4 or 5 different charities that he really works with. The biggest one is the Bill Gates charity. And you get to actually vote on where some of that goes. One of the cool parts about it is that he writes a letter on a yearly basis. And that letter and the annual report, he says, when I write it, I'm thinking that I'm sending this letter to my aunt, or my sister, who is not in the business, doesn't understand the business. So I have to figure out how to write it so that it's in plain English. Making something simple is hard to do. Making it complicated is what everybody does. So he makes it very simple to understand. There's all kinds of wonderful on his theory of how he does what he does. There is a discount. A part of that discount is being able to buy the stocks at great prices. Shareholders. What's interesting is that people have been passing down the stock for generations. So, he says, if I had a church, I don't want new people in my church every week. I want people to come in and stay. And so that's why they have such loyal shareholders. And so as I've been to these conferences, one of the first questions I ask is, how long have you been in Berkshire? And people will say 10 years, 15 years, 20 years. I got it from my parents. So it's very, very different. They're not traders. They are long-term partners for what he's doing. Owner managed, which means that people, when they do buy these companies, they keep management in place and put incentives in there for these guys to be able to go on to their next level. The portfolio, he invests in companies that make money. Okay, he invests in companies that make money. That's his modus operandi. He doesn't buy Bitcoin. He doesn't buy gold. I'm not saying that you can't own some of those in your portfolio. He buys companies or invests in companies that are publicly traded that make money. They have a lot more tech exposure now than they did before. And Buffett controls some of the investments, but Ted and Todd are the 2 other great guys that do a lot of the investment. And remember, they're managing hundreds and hundreds of billions and billions of dollars worth of assets. Asset protection. The reason we like this so much is it's so easy to be able to pass this down to the next generation, is because it's a stock. It's pretty hard for somebody to come after you. And reduces the investment mistakes. they've been doing this for a long time. Let's go to the next section here. It's very easy for you to put this into your estate or to transfer it. Because it's a stock, it's really easy for you to give it to your kids, your grandkids. It was easy for me to take the stock that my wife and I owned and to transfer it into our foundation. It was very easy to do. It's just boom, boom. And was able to transfer that into our foundation. Now we're going to transfer it to you. I'm going to give it to you. So that's one of the great parts about it. Instead of having hundreds of millions of people that own a little bit of their stock, that are not loyal, that are coming in, trying to make a quick buck on it. He's gone the other direction. He wants a smaller shareholder group that love what he does. He wants people that come to his church. And when I say that, I mean, people that are loyal to what he's doing, that will be there on a weekly basis. He has a whole different mindset as a business. So they own a lot of these wonderful businesses like See's Candy, RC Willey, Geico. They own all these great companies. And then they also invest in stocks, but they treat them like they're buying a business. He doesn't care. All he cares about is it make money? Is it going to make money for him? The international exposure, he's starting to do a little bit more. And when I say he, I'm talking about the whole group. Very few people, they see that it's him and Charlie. Well, the reality is that they've got hundreds and hundreds and hundreds of big managers that are doing it, just like Disney. Warren, this is his canvas. This is what he's built. But when he passes away, it's just going to keep going without any problems. The stock split, when the book was written, Buffett never split his stock. Started out about $65 or so, and it's continued to go on to hundreds and hundreds and hundreds of thousands of dollars. Now, with technology, the ability for you to be able to invest in stock in Berkshire stock is because technology is allowing them to take a little small portion of it. But if you would have bought the A shares, it's $300,000-$400,000, and it started out like $65. Very inexpensive. But now you have the ability, because of technology, to own a little bit of that. Shareholder discounts. As a shareholder, you can get discounts on different products or companies that they do. Ownership, big part on the ownership. You are an owner. You're part of the owner. You're part of the group. You're just not a speculator. You're part of the group. One of the things that they do is they do a lot of acquisitions, but they don't track people down. People come to them because they have such a good record, a wonderful record of doing the right thing and treating people fairly, and then having it go from there. I've got a friend, Bill Childs, who was the owner of RC Willey, which is a big furniture store here in Utah and other places. And he lived really just around the corner from my dad. And so I got a chance to talk to the founder, the owner of RC Willey. And he talked about how that when they merged and how they bought it, how it was just this wonderful, seamless product. And they're all very, very happy with that. Investing with a higher purpose, definitely. The book value per share, that's something we're going to talk about during the conference. So we'll get more into that one during that next conference piece that we do. Equal opportunity investment. Joining a winner, disguise a winner. And again, because of time, I'll go through these a little bit further. Billionaire maker, there's people I met that had been investing with for years that had done extremely well. It preserves your family wealth because you can literally take these shares and transfer them very easily to family. There's all kinds of discounts and the disclosures. It's a higher price. The A shares are a higher price. That means people don't come in and trade them. They just own them for long term. Okay. Omaha based, he has a thing that he says, if you want to do well, what you do is you plug your nose with one hand and you point to Wall Street with the other, because there's so much crap that goes on around the world in all kinds of investing. And it says, well, we don't do that. We have Midwest values and we just think very differently. The Berkshire results, you're going to be able to go. And when we do this on Saturday, we're going to actually look at the results over the last, I think 50, 60 years. And you can see how well it's done versus the S&P 500 and the NASDAQ. Now, the S&P 500 occasionally will outperform Berkshire Hathaway, but over a long period of time, 10-year period of time, 15-year period of time, Berkshire always beats it. Institutional ownerships there. Talk about that more on Saturday. We got, Trump's investment. It's included in the S&P 500. So Berkshire is such a big organization that it's also part of the S&P 500 as a smaller chunk. And so when you invest in the S&P 500, you actually own a little bit of Berkshire. I recommend you just buy Berkshire because it does better than the S&P. You don't have to fill out a tax return. I have all kinds of investments in real estate and businesses and stuff like that. Well, our tax return's terrible. Our tax return is hundreds and hundreds and hundreds of pages long because I invest in so many businesses and real estate. Whereas when you got a stock, there's no tax return to fill out until you sell it. Okay. Or you give it away. Small shareholders, perfect. Again, when you buy one stock, you own hundreds and hundreds of companies. Similar to the S&P 500, but these are some of the best companies that are out there. And again, it has an index measurement to it. Indefensible becomes defensible because he's very much into the companies that make a profit. He has a moat. He'll talk about the moat. What's a moat? A moat is where you have a castle, and around the castle is this big moat of water. They pull up the drawbridge so that people can't attack them. And then they put alligators in the moat. Well, the companies he buys have to be the number 1, 2, or 3 biggest companies in its market. And then they will buy those so that it can survive when the winds blow. Okay. He loves big acquisitions. He says, I'm out looking with my elephant gun. Instead of buying little chunks, he likes to buy big chunks in the billions and billions. The free use of money. This is kind of an interesting way to look at it because Berkshire, when it started out as a textile mill. And that's where the name Berkshire Hathaway came from. And, he talks about his partnership that he had before that, and then Berkshire Hathaway. And as that mill made money, he took that money, instead of putting it back in the mill, he started investing it into the insurance companies. And then they eventually bought all of Geico Insurance. They have all kinds of insurance companies that they love. And they don't, because people are paying a premium for their insurance, they don't have to pay. They're not borrowing money. This money's free. So they've got billions, $150 billion just in float. They call it float, money that they've got that they can use to make more money with, but they're holding it on. So if there's any kinds of accidents or stuff like that. Truth in advertising, there's another one. We're gonna go into another section. We're gonna go through the last 50 in this next section. But that's really kind of how we started out, truth in advertising. And we'll talk more about that on Saturday. So hang on, we're going to come back for our next section where we're going to go through the last 51 of these reasons. So hang on.